Hello everyone, and welcome back to the channel. Today, we're diving deep into Bitcoin's current market position. Looking at everything from the big picture fundamentals to the nitty-gritty technicals, is a major breakout just around the corner, or should we be prepared for a pullback? Let's get into it. Let's start with the fundamentals, because they build the long-term foundation for price. First and foremost is scarcity. Bitcoin's supply is hard-capped at 21 million coins. That's it, no more can ever be created. This fundamental principle of scarcity is a core driver of its value. Think about it. As demand goes up, a fixed supply naturally puts upward pressure on price. And speaking of demand, institutional adoption continues to be a massive story. We're seeing a constant stream of Bitcoin ETFs, corporations adding BTC to their balance sheets, and large-scale holders accumulating. This isn't just retail enthusiasm anymore. This is serious, long-term capital flowing into the asset. This growing institutional demand creates a strong and consistent support for the price over the long run. Of course, we can't ignore the macro environment. Factors like inflation, interest rate decisions by central banks, and global economic shifts all play a significant role in how Bitcoin behaves. Right now, the overall environment is leaning slightly bullish, but, as we all know, things can change in the blink of an eye. A sudden geopolitical event or a shift in economic policy could easily rock the boat. As you can see here, the trend of rising demand is on a collision course with that hard supply limit, which is a powerful combination. Now, let's switch gears and look at the charts. On the technical side, the picture is fascinating. Bitcoin is currently coiled up, sitting just below a critical resistance zone between $112,000 and $115,000. This is the ceiling it's been struggling to break through. If BTC can gather enough momentum to decisively push above this zone, we could see a quick and powerful move toward the $120,000 to $125,000 range. From there, a push toward $130,000 or even higher by the end of the year becomes a real possibility. Several indicators are hinting that a breakout might be brewing. We're seeing bullish patterns in exponential moving average crossovers, occasional spikes in volume on upward moves, and key trend lines holding strong. All of these suggest that underlying strength is building. However, it's not a one-sided story. The sideways consolidation we've seen over the past few weeks shows that the market is still taking a breather and digesting the recent gains. It's a tug-of-war between buyers and sellers. On the flip side, we have to respect the support levels. The most immediate and important support is right around $108,000. If that level fails to hold, it could open the door for a correction down toward the $100,000 to $104,000 area. And as always, we have to keep an eye on those macro events, as a negative surprise could trigger an even larger pullback. So, with all that in mind, let's break this down into three potential scenarios and assign some probabilities. First, the bullish scenario. This is the one everyone's excited about. A clean breakout above $115,000 could ignite the next leg up, pushing BTC toward that $120,000 to $125,000 range, and potentially setting the stage for $130,000 or more by year-end. I'd place the probability of this happening at a moderate 40 to 50%. This assumes that institutional flows remain strong and we don't get any nasty surprises from the macro economy. Next is our base case, which is often the most realistic. In this scenario, Bitcoin continues to trade in the current range, bouncing between $108,000 on the low end and $115,000 on the high end. It would be a period of consolidation, where the market builds energy while testing both support and resistance. Given the current market neutrality, this feels like the most likely path for the immediate future. I'd put the probability here at roughly 35 to 40%. Finally, we have the bearish scenario. We can't ignore the risk. If that key support at $108,000 fails, we could see BTC drop to the $100,000 to $104,000 zone. If a major macro risk hits the market at the same time, the drop could be even more severe. While this is less likely than consolidation, the risk is very real. I'd assign this a probability of about 15 to 20%. It's crucial for traders to be prepared for this possibility. So, to make it simple, here are the key levels to write down and watch on your own charts. Our primary support is at $108,000. That's the floor we need to see hold. Our key resistance area is between $112,000 and $115,000. That's the ceiling we need to break. If the breakout happens, our initial targets are in the $120,000 to $130,000 zone. Also, make sure to keep a close eye on volume and momentum indicators. They often give you the first clue that a real, sustainable move is about to happen, sometimes even before the price itself breaks out. So, the bottom line is this. We are at a very dynamic and pivotal moment in the Bitcoin market. If you are actively trading, it is absolutely essential to keep your risk management tight. Watch these levels closely, and don't get complacent or assume the trend is free of danger. Bitcoin certainly could move significantly higher if a breakout occurs, but a failure to hold support could quickly bring about a meaningful correction. Stay patient, stay disciplined, manage your risk, and always, trade with a clear plan. Thanks so much for watching. If you got value from this breakdown, please hit that like button and subscribe to the channel so you don't miss our next update. Stay safe out there, and I'll see you in the next video.